Welcome everybody to another 144 and 360. In this one, dealing with the Fibonacci retracements, we're also going to add in a little bit about the Gann squares. We do our major Gann squares with a 144 analytics twist to it. In this one, we're going to take when the Fibonacci retracements give you a target based on the 144 rules and guidelines, and don't quite complete the target. And that is why we watch all the retracements regardless of what the target is. So first off, we have here where this high was 78.6 back of this high, this low. Now, anytime that you don't make a new high and it comes in the area of 78.6, it could be the end of the market, or at least send you 78.6 the other way based on the rule, and or be the end of the bull market or bear market, depending on which side of the market this is happening on. So from there, 78.6 did take you 78.6 of these two and then on to more. Now, when you get a low that came very close to a major Gann square down here, but didn't hit it exact, and it stayed well above the 61.8 of this low down here in end of May and into the high in July. So what we then have to watch is what the numbers are up above to see if it's got any direction or if the direction is changing. And in this case, we just look at 38% back up to the high from here, and we see that the market went 38%. Now, if this trend's going to continue down from the 38%, we will be looking for a new low. And this is where we're saying this is what the target was based on that. But as you can see, what the market did was all it could do was go 61.8% here and then carry on up to 61.8 up of that high again here, and the setback from there only 38%. Now 61.8%, we would have been looking for 61.8% the other way based on the rule and guideline, but again it holds 38, telling us we have a direction here and a solid one to start. So what happens from here? It does make that new high, but falls just short of not only the major Gann square of 1401.5, but also 78.6 on there. So from that one, we take that high. Our target base, because it got close enough to 78.6, is 78.6 the other way, and that indeed was hit and completed. Now, you had a few other retracements in here where it even went back up and hit after taking out 38%. It went back to 78.6 up there, as you can see, giving us another secondary sell signal after even hitting that thing. So you can see this one, after it hit it completed the 78.6 to 78.6. And again, the other thing about 78.6 is it causes wide swings just as 61.8 does, and that's what you've been having here. Now, the fact that this market could only go 38 back is not a good sign, even though we're looking for 78.6 here. We came back down to 78.6, not much of a rally, and actually closed under it on Friday. We will have to get back up above this area, and ideally back above the 1311.5 major Gann square. If so, we will look for 78.6 again up on top to complete this 78.6 to 78.6. Again, we'll watch the 38% level to see if the market is still in a downtrend, as it's saying right here. Minor, but still that's what it's saying by holding that 38% there. After that, if this doesn't hold here, we'll be looking for this area between the 1266 quarter major Gann square and then a major retracement here based on the May low, July high, 61.8. Ideally, what you'd like to see if this area is going to hold is that it would hit into here, even trade below it, and then close back above the 1266 quarter major Gann square, and then you can get a rally going again, even though it's making new lows. So Our second one we're going to take a look at is ADM. It's a stock, and Archer Daniels Midland. And what we've been covering this one on our free posts on our website, so you can go there and check back. But what I want to do is just start where this thing comes from up here, and we're going to start with this high here, which went 61.8 of this area right here. Now again, so I mean, you can see it in here where the market turned at the 78.6 level and the major Gantt square. That turned the whole trend. Then you started holding 38, 23, 38, all going down into 38 back to the 2020 low. Now again, we go to here, since that's 61.8, we're going to look for 61.8 the other way, following the rule, the 144 61.8 rule. And here we, missed by a little bit here, but still close enough to then enact the rule again, is to look for 61.8 the other way. And again, this is what this one's all about when it doesn't do that, and you see it stop right at 38%. So that's telling you that this trend is still intact, as minor as it is, but we're already saying that it's down from here. We just missed the target there, but the rally is only able to go 38%, not a good sign for the upside and a good sign for the downside. So then the next rally could only go 23%. And then what you get into here, and again, this is where no real reason for this low based on a Fibonacci retracement and or a major Gantt square. So we're going to keep an eye on what's above the market to see if the trend is going to continue on down and finally hit something that does mean something, or the trend changes because of the level or the retracement that gets taken out. So we see here we've got 38% of this high and this low was right here at the 76.20 area. Then you're taking that same low, we go back to this high, we had the combination of 23%, exactly same spot, and as you can see, the market just fell apart from there. Now, ideally, 23.38 telling us we should be going for the new lows. In this case it did, and in this case it did here too. So in any failure to do that comes at a 78.6 retracement, can be the beginning of the next bull move, just as it was the end of the bull move up here at 78.6 and started this whole turn. We could see this be the start of the next move higher. Ideally, the target, since we already reacted from 23 and 38, would be this one here, where those same two highs give us 38 and 61.8 here. And so if this level here holds, we'll be looking up here for this $81 area. And any failure to hold here, we'll look for 38% of the all-time high, all-time low, which brings you into a 6307 major Gantt square. Now, two other things, just to show you how this is in every market. We're going to take you into right here, the February hogs. And we're just going to take the retracements here, 61.8, took you 61.8 and more. The 78.6 of this high and this low held perfectly here, sent you up to 61.8, didn't quite get the 78 back the other way. And what this was here is 61.8 of this high, this low, and also a major Gantt square that sent this market back down. The next attempt to rally took it back to the contract highs, 38%, and into the 7607 major Gantt square. We know we have a downtrend when that's all that you can do is rally 38% or 23%. So here you go. The next attempt to rally hits 23% back to the contract high and the 7156 major Gantt square, goes down 78.6. We thought this could be the start of the whole next bull move. Again, only able to go up back into the major Gantt square and the 23% retracement. And here we are now right back down at 78.6 again with this new high and the 6760 major Gantt square. So provided this can hold here, we're going to be looking for 38% back up here because we've already reacted to 23%. And we'll be looking right about 74.5 on this next rally here, provided this area can hold. One thing you still have to watch is anytime you make even another low, and in this case we have 61.8 on the long-term chart, and if you were to get down into this area and get right back above these lows here, and ideally back above the 67.59 major Gantt square, you could then see what the target would be 61.8 the other way because of this being a 61.8 retracement. Next one here, again, just showing you it's everywhere, and what you got to look at is this is the crude oil. Now, what we have here, okay, let's see. We'll get this fixed. Okay, so what's happened here is that, one, just wanted to show you, we just did an article based on the seasonal timing in all markets, and you can see here the winter, spring, summer, fall, or winter, fall, summer, spring dates here that hit perfectly. They usually come within either right on the day as they did here, or they come within a week of an important high or low. And in this case, you can see right where these things are, and we just currently hit here on the 21st in the crude oil. Now, let's just take this run up here, stops at the major Gantt square up at 87.90. The first setback takes it back down to 38%. Now we know we should be looking for a new all-time high. Again, the reason for this video is that when they fail to do what you think they should do based on the rules and guidelines, and in this case, any failure to make a new high that hits the 78.6% area, it tells you, or can be the start, either just send it 78.6 the other way, or be the end of the bull move, which indeed it was. So that took us down to 61.8. We already reacted from 38. So 61.8, we would have been looking for 61.8 back up, but as you can see, 38.2% stopped it. And then that took it down. Excuse me. That's telling us the trend is still down, even though we hit this 61.8, took it up to 38.2. Never a good sign. Or it is if you're short the market. That's what you want to see it stay under 38. Goes down to 78.6. And again, this could send you 78.6 the other way. But again, watching all the retracements, it just got up into 38 back of this high and this low, which also happened to be a major Gantt square at 75.57, 38% back here, and you even have a little seasonal timing there, which has sent us down so far. Key thing to watch here, 38 should send us to new low based on the rules. But if anything happens here and it holds 78, you're going to have the reverse of what you had up here, and that could be the bottom that starts the next move higher. So if you can hold this area in here, that's what we're looking for. We would be looking for is all the way back up to 78, because that was 78 down here. But of course we will watch 61.8 if this area holds. If not, you're looking at a long-term retracement that could take this down into the $58 area. And as long as it's staying under a 38% or 23% on that way, if it makes those new lows, that's what you're going to keep an eye on when you follow these rules and guidelines for the Fibonacci retracements. We hope you enjoy this video. We would like to see you subscribe, if you like it, to our webpage. If you trade the grains and livestock, we'd appreciate even more if you would come and give us a try, subscribe to our premium membership. That's on our website, and you can also just view us occasionally and see what we've put out there for free based on these things right here, where we're doing seasonal timing, occasional video posts on the Fibonacci retracements, and hopefully you'll check us out and keep viewing our videos. And until next year, Happy New Year.